Welcome back, B2B Fam. This week we're diving into the stock market outlook for the week ahead. Understanding the market trends and upcoming data is crucial for making informed investment decisions. Here's what you need to know for this week. Well, last week we saw a significant market decline, with the Dow Jones falling by nearly 600 points. This drop was the worst for stocks in the past 14 months. It's really largely driven by strong economic data that raised concerns about prolonged high interest rates. When economic data is strong, it means the economy is doing well. But it also makes investors worry that the Feds might keep interest rates high to prevent the economy from overheating. But high interest rates can also be bad for stocks because they make borrowing more expensive for companies, and that will hurt profits. We also need to keep an eye out on the upcoming economic data releases this week. On Tuesday, we're going to see the Consumer Confidence Report. This is going to tell us how optimistic or pessimistic people are about the economy. High consumer confidence usually means people are spending more, which is good for the economy. On Thursday, we'll get the Q2 GDP data. This is just going to show how much the economy grew last quarter. Finally, on Friday, we're going to get the Personal Income and Outlays report. This is going to include data on how much money people are making and spending. Then in terms of earnings, you need to watch out for reports from companies like Allegiant, Chewy, and Costco. These reports are going to give us snapshots of how well those companies are doing and can impact their stock prices. Stock earning reports can boost investor confidence and drive stock prices up, while disappointing reports can have the opposite effect. I think we all seen how the earnings from Nvidia pushed up the whole market. Like literally they're trading above 1,000, which I talked about in one of my previous videos. Also, if you want to know how to read an earnings report and what all this stuff actually means, in that video where I talked about Nvidia, I also went in and put a cheat sheet in the link below. I'll leave it down here as well for you to go do a little bit more research to understand how these things work. And speaking of Nvidia, I talked about in one of my previous videos that they had those strong earnings and they announced a 10-for-1 stock split. And I just want to reinforce that that means that's going to make it a lot more accessible for smaller investors to actually get involved. But if you're a current holder, nothing's really going to change. They just split it and you'll get 9 more of the shares of what you already have, kind of balancing out the total ownership. So nothing crazy there, but if you don't have Nvidia, it may be a good time. Not financial advice, but every time I think they've hit the ceiling, they just keep climbing higher and higher. And when you look at it, the technology sector was running before that pullback that I talked about earlier, about 600 points. We're going to continue to see tech run because everybody wants to see those companies win, and they have a bunch of stuff happening in AI that's really setting the bar in the tech sector. So that's one sector to keep an eye out for as well. But for me, I'm not really going away from the big companies in tech. Like I'm looking at Microsoft, I'm looking at Alphabet, just because of those super high profit margins. They're making a ton of monies and still have significant growth potential, even at their market cap. I'm also looking out for in June what Apple announces in WWDC. I think now is the time for them to actually talk about AI. So they may also make some moves. But if the decisions that I'm making right now, Nvidia, Microsoft, Alphabet, and I didn't really like the way the market reacted to the Meta earnings, so I need to dig a little bit deeper on them, but that's what I'm looking at in the tech sector right now, unless something shifts in the market with the Fed and their interest rate announcement. One other sector to look at as well would be the energy sector. So remember, I want you guys to understand this market and what's happening around you. Like I know if you're anything like me, you drive past the gas station and you're just like, that price is a bit low. So that tells me straight away that oil prices are probably down. So they're down to about $78 per barrel. This is great because we get lower prices, but if you're looking to invest in the energy sector, like they need those prices to be higher, and that's gonna actually hurt them when prices are down. So as an investor, you need to look at every angle. If you're just thinking like a consumer, you're like, yay, gas prices are down. But if you're an investor, you're like, wait a minute, those oil prices and those energy prices may be down, and that's going to hurt some of these stocks that I'm holding in the energy sector. So you have to see the big picture and understand what all this stuff means is happening around you on a day-to-day basis. Think like an investor, not a consumer. I've also had my eye on some of the overweight emerging markets like India, Saudi Arabia, and Mexico. There's some that are really going to be poised to benefit from some of these structural economic shifts and a lot of the stuff that's happening in the geopolitical stratosphere, if you will. So it's always good to keep an eye out on emerging markets, but it can definitely be risky. But to think about it, without risk, there is no reward. So there are some opportunities there. You just have to be very, very careful when you're investing in emerging markets. And speaking of some of the recent CPI data, it really showed inflation slowing as expected. But as we keep hearing, like from Uncle Jerome all the time, is that the Fed's going to remain cautious and data dependent. I think they need more evidence of sustained inflation just before they consider rate cuts. I'm pretty sure it was JP Morgan that pushed back their next rate cut to September. Like, it just keeps moving with the goalposts. Like I said before, I want you guys to understand this stuff and not just think it all sounds like mumbo jumbo. So I want to simplify it. We talk about it all the time, but lower interest rates are good for stocks because it makes borrowing cheaper for companies. So that is a good thing. But then you have the double-edged sword of, well, if lower interest rates are cheaper for companies, it's also cheaper for consumers. And then we buy too much stuff and overheat the economy and make them have to raise it. And we create this vicious cycle. And the Fed does not want to do that, especially in an election year like we're in right now, when we already know, just historically, if you look back at 2016, 2020, it was very volatile in the markets around those elections. Another thing that drives market volatility is going to be holidays. Like, we look at it now, Memorial Day is coming up and everybody gets kind of like itchy and antsy after holidays. And it's like one day the market's closed and everybody comes in and they're more irrational than usual. I wasn't gonna say super irrational, but the market is always irrational, but it's even more volatile than usual after a holiday. So I kind of just sit back, especially with that market sell-off as well. I want to see what happens. Like, I'm not making any predictions, but I'm being cautious because the one thing I know I can expect coming off a holiday and in a election year is market volatility. So please tread it with caution. But here on Broke to Breakthrough, I'm all about helping you break those generational wealth curses. And I just don't want to sit here and talk to you. I actually want to give you some actionable information. And it's like I said before, in short term, I'm still looking at tech, but only big companies like Nvidia, Microsoft, and Alphabet. And those are companies that already have kind of made a play in AI, and they have multiple different tranches of AI underneath one umbrella, right? So when I think about Microsoft, the relationship they have with ChatGPT, the stuff they're doing with developing their own AI chip, Alphabet or Google, the same thing. They've talked about developing their chips. They have a lot of infrastructure as well that they're upgrading to be more user-friendly with AI. And then of course, Nvidia goes without saying. So I'm looking at them, but mainly because they have multiple plays across the AI area. Same thing with Apple. As soon as I see what they're doing with AI, I would invest. One interesting thing, I think I talked about it in another video, but I just want to keep bringing it up, is that a lot of the companies that are like, oh, I'm going to make and add AI to just a normal product, they're not really performing well. It's the companies that really own the infrastructure and all the ancillary things for AI that are really crushing it, right? You got to think about it. What tools do the people need to bring AI to the mainstream? So you need compute, right? You need storage. You need a energy solution as well that's going to be sustainable in the long term and environmentally friendly. So all that stuff is where I'm looking at when I'm thinking about the market. Like, I'm not thinking about just jumping in everybody else. I'm thinking about trying to sell shovels so everybody else can dig for gold. And if you look at the market and historically, that is the companies that are winning. So don't always think like, especially if you're somebody that's creative and you're an app developer or something else, you're like, oh, I'm going to develop a tool and just add AI to something else, right? To a normal tool. Now it has AI, you change the name and put AI in there because you think that's going to sell it. Not necessarily. Start to develop things that people that are utilizing AI need, right? Tools, a shovel. Don't always be the person digging for gold. Give them the tools to dig for it yourself. And then in the long term, just make sure your portfolio is diversified and strategically allocated. One thing people don't look at is how closely correlated are some of these other stocks that I'm invested in with each other. That's something you want to be careful of, especially if you're investing in ETFs. If you're in several different tech ETFs, like, you're going to have like overlap of companies. If that's a strategic decision, sure, do it, but it doesn't really make sense. Like, I love all the Vanguard stuff, so I just go with them when I'm looking at ETFs. And if I want exposure to like Bitcoin or whatever, I'll look at some other ones. Another thing that came up as well that I just thought about was the Ethereum ETF did get approved. Like if you look through my channel history, this was a crypto channel. I intentionally kind of strayed away from it because I want to talk about things that are sustainable, but I still do invest in Bitcoin and Ethereum, nothing else. But with the Ethereum ETF coming on board, it's something to pay attention to because you're going to see some of those random crypto altcoins start to run. But if you're somebody who just wants to play it safe, that gives you an avenue to get exposure with, I wouldn't say without the risk because it's crypto, so it's risky, but it gives you another way to get into Ethereum. And I'm going to dig deep and do my research on that and probably make another video really breaking down the ETH ETF at a later date, where you just need to spread all these investments across different sectors and asset classes to reduce that risk, but also improve our potential returns. So it's super important to diversify across the board when you're looking at the market, but to also understand what you're looking at. Like I'm got a cheat sheet down below. If you're somebody who is jumping in and you're looking to trade, I have a quiz that you can go in, answer, I think it's 4 or 5 questions, and it basically will tell you what type of trader you are, and then I'm going to give you a bunch of other cool things as well. It's going to be dedicated to the style of trader that you are. And I have lesson plans that are specifically tailored to your style that you identified in that quiz that you can go through and actually learn how to trade or the best strategy for you based on your personality or risk tolerance. And I'm dishing out all this sauce to you free of charge. So if you dig in the videos, don't forget to like and subscribe. And like always, our mission here on Broke to Breakthrough is to leave more behind for our families when we die than just debt. And if you really dug this content, please check out the video below because it is a banger as well. Peace.